Welcome to the Accounting Desk, your channel for learning accounting in a simple and practical way. In today's video, we'll explain the three main types of accounts used in accounting: personal accounts, real accounts, and nominal accounts. Understanding these helps you apply the rules of debit and credit correctly and record transactions accurately. Let's start with personal accounts. These accounts relate to individuals, firms, companies, and any entity with a legal identity. They include accounts of people like customers, suppliers, debtors, and creditors, as well as organizations such as banks or businesses. The rule for personal accounts is debit the receiver, credit the giver. For example, if you pay a supplier, the supplier's account is credited. If you receive money from a customer, the customer's account is debited. Next are real accounts. Real accounts relate to the assets of a business. These include both tangible assets like cash, machinery, buildings, furniture, and intangible assets like goodwill, patents, and trademarks. Real accounts are permanent in nature and carry forward to the next accounting period. The rule for real accounts is debit what comes in, credit what goes out. For example, when the business purchases a machine for cash, the machine account is debited and cash is credited. The third type is nominal accounts. These accounts relate to incomes, expenses, gains, and losses. Examples include salaries expense, rent expense, sales revenue, commission income, and interest received. Nominal accounts are temporary accounts and are closed at the end of the accounting period by transferring their balances to the capital account. The rule for nominal accounts is debit all expenses and losses, credit all incomes and gains. For example, when the business pays rent, rent expense is debited. When it earns sales revenue, sales are credited. In short, personal accounts relate to people and organizations, real accounts relate to assets, and nominal accounts relate to incomes and expenses. These three categories make it easier to classify transactions and apply the correct debit and credit rules. If you found this explanation helpful, don't forget to like, share, and subscribe to the Accounting Desk for more clear and simple lessons. Thanks for watching, and see you in the next class.